Business and consumer loans. Have you ever taken out a loan, whether it was for a business or as a consumer? Just kidding! Of course, we will not be talking about the loans you have done. Today, I will be talking about business and consumer loans, what they mean, and how we solve them. Borrowing money isn't just about saying, hey, can I borrow money for this, or that? No, there's a process and rules that we have to follow to actually obtain the money we will borrow. Come on, and let's get right to learning. Firstly, I will be defining the terms. At some point in our lives, we really need that financial assistance, whether it's for a business or just for personal use. Business entrepreneurs, family members, or just people in general really need that assistance, and so they loan money. We can loan money not just through lending corporations, but through the use of credit cards, amortization of appliances, and many more. So firstly, what's a loan? A loan is a form of debt contract involving two parties, an individual and an organization. The lender, typically financial institutions, advances a sum of money to the borrower. The borrower, in turn, has to follow a set of rules and agrees to it, such as principal amounts, interest rate, finance charges, and many more. Loans can be secure and unsecured loans. Now, you must be wondering, what's the difference between the two? A secured loan is when the borrower pledges assets such as collateral in order for their loans to be approved, while unsecured loan doesn't need you to pledge collateral for your loan to be approved, so they approve of it regardless of pledging collateral. So, now you must be even more confused. What's collateral? Collateral, like I said, is the things that you pledge in order to secure your loan. Collateral can be real estate or other investments. So when you, the borrower, fail to pay the loan or the money you borrowed, the lender has every right and will take the things you pledged as collateral. So, you failed to pay me, and you pledged your car as collateral. I will then take your car because you didn't pay me back the money you owed. Loans differ in many forms. The most common types are business and consumer loans. So, what do they mean? So, what is a business loan? A business loan is a loan that is used to fund a company's operating expenses and other financial needs. You could take out a loan to expand your business or to start it. A business loan is specifically intended just for a business. So if you were to take out a loan about just buying a car for personal use, you cannot take out a business loan because that's simply for personal use. That's for consumer loan, which I will be talking about later. There are different types of business loans, such as microloans, invoice financing, mezzanine financing, bank loans, asset-based financing, cash flow loans, and business cash advantages. Now, the first type of business loan is a microloan. A microloan is a small loan designed to finance or fund entrepreneurial projects to individuals or groups in less developed areas. One type of it is Small Business Administration Loans, or SBA loans, which a government-backed loans offered to small businesses, often with favorable terms and lower interest rates. So basically, a microloan is for small businesses in less developed areas. A microloan cannot be loaned to big corporations. A microloan is specifically intended for groups in less developed areas and are planning to start small businesses. The second one is the invoice financing. It is a form of business loan where a company borrows money by using its outstanding customer invoices, accounts receivable, as collateral to get immediate cash. The third one is mezzanine financing, a loan that offers repayment terms adapted to a company's cash flows. The fourth one is asset-based financing, a loan that uses an asset owned by a business as security against a business loan. The fifth type of business loan is the cash flow loans, where the business pledges its future cash flows to repay the loan, often requiring less traditional collateral than other loans. The sixth type of business loan is the business cash advances. It is a lump sum payment provided to a business in exchange for a portion of its future credit card sales. The seventh type of business loan is the term loans. It is borrowing a lump sum with an agreed schedule for repayment. The eighth and last type of business loan is the business line of credit. It is revolving credit that businesses can draw from as needed, with interest paid only on the amount used. Since now we have finished discussing business loans, we will now move on to consumer loans. So, what is a consumer loan? A consumer loan is a loan used for personal, family, or household purposes. It includes credit cards, mortgage, home equity lines of credit, refinances, auto loans, student loans, and personal loans. Now, I will be discussing the different types of consumer loans. So, the first type of consumer loan is credit cards. It is where users pay monthly with interest on unpaid balances. So, when they use credit cards, it is not your money but from the bank. And every month, you will be paying the amount of money you used in that month. So, for example, if your credit card was to have a maximum amount of 10K and you would to use it or use half of it, you would pay the month that. The second type of consumer loan is mortgage. It is an agreement between you and a lender that gives the lender the right to take away your property if you, the borrower, fail to pay the money you borrowed with interest. The third type of consumer loan is home equity line of credit. It is a line of credit secured by your home that gives you a revolving credit line that can be used for large expenses or to consolidate higher interest rate debt on other loans, such as credit cards. The fourth type of consumer loan is refinances. It is when you replace one loan with another one, typically intending to lock in a better interest rate, lower monthly payment, or access your equity. The fifth type of consumer loan is auto loan. An auto loan is taken to finance a new or used car purchase. The sixth type of consumer loan is student loan. A federal student loan taken by a college student to cover their tuition. The seventh and last type of consumer loan is personal loan. A personal loan is taken to consolidate credit card debt. Other terms related to business and consumer loans are the term of a loan. It is the time to pay the entire loan. The next one is the guarantor. It is a person who guarantees to pay for someone else's financial obligation if the borrower fails to do so. And what are the differences? The difference in collateral between a business and a consumer loan are: in a business loan, it may require collateral, real estate, other investment, equipment, fixtures, or furniture. And consumer loan, it also requires collateral. So there isn't really that much of a difference between the two because they both use collateral. So, what is the difference between the guarantor of a business loan and a consumer loan? In a business loan, it requires the business owner to sign as a guarantor, while in a consumer loan, it doesn't usually require a guarantor. So what is the difference between the two in terms of documents? In a business loan, the lendee has to submit a credit report, income tax reports, and the company's financial statement. While in a consumer loan, the lendee may require a credit report, bank statements, and an income tax return. If he or she is employed, a certificate of employment and employee payslips will be submitted. What's the difference between the two in terms of how long they have to pay for the loan? In a business loan, it usually has a shorter term, while in a consumer loan, it usually has a longer term. So what's the difference between the two in terms of interest rate? In a business loan, it usually has a higher interest rate, while in a consumer loan, it usually has a lower interest rate. See, the difference between the two and what they mean is actually pretty easy. Once again, a business loan is intended for business purposes, while a consumer loan is intended for personal use. So, if you borrow your money for a shop, that is a business loan. While if you borrow money to renovate your house, that is a consumer loan. Now, I want you guys to answer the questions on the screen and identify whether it is a business or consumer loan. Now, are you guys done answering? Very good. Let's see if you are correct. Number 1 is consumer loan. Number 2 is business loan. Number 3 is also business loan. Number 4 is a consumer loan. And number 5 is a business loan. Now, since we are done identifying and defining the terms, I will now be discussing the solving, which we must all dread, but I will assure you that it is easy. But before we get into the solving part, I will be discussing the terms that will be used. The first one is amortization. It is the process of paying a loan over time in a regular equal payment. The second one is amortization method. It is a method of paying a loan, principal and interest, on an installment basis, usually of equal amounts at regular intervals. The third one is mortgage. It is a loan secured by collateral that a borrower is obligated to pay at specified terms. A mortgager is the one who borrows a mortgage, and a mortgagee is the one who lends a mortgage. The fourth one is collateral. Again, these are assets that are used to secure the loan. Collateral could be real estate or other investments. A collateral mortgage is a mortgage on a movable property. The fifth one is outstanding balance, any remaining debt at the specified time. The last one is amortization schedule. It is a complete table of periodic loan payment that shows the principal, interest, and outstanding balances after each payment is made. Now, since I have already defined the terms that we will be using, let's get on solving. The first thing we'll be doing is computing amortization and mortgage. Are you guys ready? Let's go! So, the formula for future value is this, wherein F, future value, is equals to P, parentheses, 1 plus J, parentheses, raised to the power of N, where P is equals to the loan amount or principal, while J is the interest rate period, and while N is the total number of payments. So, in the future value formula, J is given throughout the formula, where J is equals to R over M, where R is the annual interest rate, while M is the number of compounds. Now, do take note that if it is annually, M is equals to 1, while if it is semi-annually, M is equals to 2, quarterly, M is equals to 4, and if it is monthly, M is equals to 12. N is also given throughout the formula, which is N is equals to M times T, where M is the number of compounds, while T is time expressed in years. Now, I will give an example and let's try to solve it together. First, let us identify the given things. P is equals to 1.5 million, R is equals to 8%, T is 1 year, and M is 1. because like I said, if your number of compounds is annually, M would automatically be 1. Now, we need to find J and, that's M guys, sorry, J and N. So, the formula for J, like I said, is J is equals to R over M. Our R here is 8%, which we turn into decimal is 0.08. And our M is 1. So, our J is equals to 0.08. Now, our N, the formula for N is M times T. Our M here is 1 times T is also 1. So our N is 1. Now that we found both J and N, let us go to solving the future value. So, again, this is the formula for F. F is equals to P times 1 plus J raised to the power of N. Our P is 1.5 mil, 1 is constant, J is 0.08, and N is also 1. So, F is equals to 1.5 million times 1 plus 0.08 raised to the power of 1. First, let's solve the one inside the parentheses. 1 plus 0.08 is 1.08 raised to the power of 1. So 1.08 raised to the power of 1 is 1.08 still. So 1,500,000 multiplied by 1.08 is 1,620,000. So that is the future value of Mrs. Arceta. It was very easy, right? Now, let's move on and solving the total amount of interest. So step 1, we will be identifying the given items. So P, or our principal, is 1.3 million. Our MP, or monthly pay, is 32K. Our T is 3 years. And our M, or number of compound, is 12. Because, like I said, if it said monthly, M is equals to 12. So it's 12. So now that we found our TA, or total amount, let's now calculate for the total amount of interest. The formula for total interest is this. TI is equals to TA minus P. So our total amount minus our principal. Our total amount is 1,920,000 minus 1,300,000. So minus the 2, and you will get 620,000 pesos. So that is your total amount of interest. Very easy, right? Now let's move on in calculating our mortgage. So the first step in solving for our mortgage is to identify the given. Our given in the problem is cash price, or CP, is equals to 5 mil, and DPR, or down payment rate, is equal to 20%, which will be then converted into decimal, which is 0.20. 0.20, sorry. Not 0.020. 0.20. So, before we solve for mortgage, we will first find the down payment. So, the formula for down payment is DP is equals to CP times DPR. So, 5 mil times 0.20 is 1 million. So, our formula for mortgage is CP, cash price, minus DP, which is down payment. So, M is equals to 5 million minus 1 million is equals to 4 million. So, our mortgage is 4 million pesos. See? It wasn't so hard, was it? Now that we know how to solve for the future value, the total amount of interest, and the mortgage, we are down to our last 2 remaining formulas. So are you ready? Let's go! So the fourth problem that we will be solving is the regular payment. The regular payment is the payment that you are paying for right now. Its difference from the future value is that the future value is the big picture payment. It is the total amount of payment that you pay after time passes by, while regular payment is the payment you do right now. So this is the formula for the regular payment. R is equals to P over 1 minus 1 plus J raised to the power of negative N over J. So P here is our principal, J is the interest rate period, and N is the total number of payments. Are you ready? It looks like such a hard formula, right? But don't worry because we got this. Now, let's get on in solving the problem. So, once again, this is the formula for the regular payment, wherein R is equals to P over 1 minus 1 plus J raised to the power of negative N over J. So our P here is the principal, the J here is the interest rate period, and the N here is the number of total payments. Okay, so we replace P with 1.5 million, J with 0.0225, and N with negative 12. So it becomes 1.5 million over 1 minus 1 plus 0.0225 raised to the power of negative 12 over 0.0225. So first, we add 1 with 0.0225, in which it becomes 1.0225. Now, once we add 1 plus 0.0225, it becomes 1.0225. Then we raise this with negative 12. So we raise 1.0225 with negative 12, which then becomes positive 0.767667475. Now, the next thing we do is subtract 1 minus 0.767667475. So we then subtract 1 minus 0.767667475. So 0.2343325, which we then divide with 0.0225, which is 10.4147782. And the next thing we do is divide 1.5 million with 10.4147782. So our regular payment would be 144,026.10 pesos. Whew! Wasn't that such a long problem? Now we're on to the last problem we're going to solve. It is about solving outstanding balance. To compute, we will be using the perspective method. It is a method wherein we get the present value of all remaining payments. So, the formula for finding the outstanding balance is this, using the perspective method. B sub k is equals to R times 1 minus 1 plus j raised to the power of negative n minus k over j, where B sub k is the outstanding balance after k or payment, where R is the regular payment, j is the interest rate period, n is the total number of payments, and k is the number of payments already made. So let's get on with our problem. So now I'll be showing you how to solve it. Like always, we will first identify the given in the problem. So the uppercase R, which is the regular payment, is 10,875.50 pesos. The lowercase r, which is the interest rate, is 14%, which we then will convert into decimal, which makes it 0.14. T, or the time expressed in years, is 6, and M is equals to 12 because in the problem it said monthly. So if it is monthly, M is equals to 12. So we don't have our N and our J, so we need to find it. How do we find N? The formula for N is M times T. So our M is 12 and our T is 6. So 12 times 6 is 72. So our n is 72. Our j, the formula for j is r over m. So the interest rate over m. So r is 0.14 over 12, which is then equals to 0.0117. So our j is 0.117. Now that we have our n, our j, and our r, the uppercase r, we will now begin solving. As always, we will first start with identifying the given in the topic. So, the uppercase R here, or the regular payment, is 10,875.50 pesos. The lowercase r here, which is the interest rate, is 14%, or once converted into decimal, is 0.14. Our t, or time expressed in years, is 6. Our m is 12 since the problem said monthly. If it is monthly, m is equals to 12. So, we don't have our n and our j. Let's first find it. So the formula for n, once again, is m times t. So 12 times 6. So our n is 72. Our j, the formula for j, is r over m, which is 0.14 because that is our r, our lowercase r, over 12 because that is our m. So our j is 0.0117. Now our k is 15 because that is the number of payments already made. Now n minus k is equals to 57 because our n, which is 72, minus our k, 72 minus 15 is 57. So our n is 57. Now let's get on solving. So again, the formula for the outstanding balance is b sub k is equals to r times 1 minus 1 plus j raised to the power of negative n minus k over j. So we then substitute it. So our r is 10,875.50 pesos. 1 minus 1 plus 0.0117, our negative n minus k is negative 57 over 0.0117. So the first thing we will do is add 1 plus 0.0117, which is equals to 1.0117. The next thing we do is raise 1.0117 to the power of negative 57, which is equals to 0.5152882629. The next thing we will do is subtract 1 with 0.51528882629, which we will get 0.484711737. So once we subtract these two together, we will get 0.484711737. The next thing we will do is divide this with 0.0117, which we will get 41.4283536. And the last thing to do is multiply that with 10,875.50, which we will get 450,554. So that is our outstanding balance. Phew! Those were a lot of solving. Let's take a break for now. Those numbers were low-key scary, to be honest. But even so, I hope you guys learned something new with our lesson. I hope you now understand what a loan is, the different types, how to solve them. So, to sum it up, a business loan is strictly intended for business purposes, while a consumer loan is intended for personal use. But there's also differences between them. But both a business and a consumer loan require collateral before being approved of it. A business loan has a shorter term but has a higher interest rate, while in a consumer loan, it has a longer term but it has a lower interest rate. And as for the problem solving, I hope you guys understood when and how to solve using the different formulas I showed. That's it! Thank you so much for watching. I hope you guys enjoyed the video and learned a lot from it. Wishing you guys good grades and good luck to the upcoming midterms. That's it. Thank you!